Hello, everyone. Thank you for joining us for today's Career Talk with Chloe Vong, titled A Day in the Life of a Quant Developer. My name is Christian Figueredo. I'm a Senior Director with the CQF, the Certificate in Quantitative Finance. Thank you all so much for joining us today. Today's talk, again, featuring Chloe Vong, is a great opportunity to understand not just what a quant developer does, but of course, the path that you can take to become a quant developer. And Chloe, I'm sure, is going to share a lot of perspective on that. As you might know from the CQF Institute's recent careers report, if you haven't downloaded the careers report, it is free. You can do that on the CQF Institute website. Quant developers are in very high demand at the moment, so you've really come to today's event at a great time. Now it's my great pleasure to introduce Chloe Vong, who has over a decade of experience in quant finance, including her work in derivatives at BNP Paribas and Societe Generale in Paris. She's currently a quant product manager and also, a quant prod. She also was a quant product manager at Open Gamma in London. Currently, Chloe is with Bloomberg as the head of EMEA for their BQuant program. In addition to all of Chloe's other credentials and accolades, she, of course, has earned the certificate in quantitative finance herself in 2019. It is my great pleasure to now hand over to Chloe. Chloe, thank you so much for joining us for today's talk.
Thanks a lot, Christian, for the introduction. Hi, everyone. Thank you for joining us today. My name is Chloe, and as Christian introduced, I am running BQuant quant developer team in Bloomberg. Today, I would like to make the session very interactive, so please feel free to send any question that you have on the Q&A box, and then with Christian, we will cover the questions by the end. For the content of today, I will share with you my journey in quant and how I see that area. So we talk about quant landscape, which is a very broad domain. In the screen, you can see the word cloud that I have created when I screen through the top 50 job advertisement on LinkedIn for quant developer job. You can see that there's a lot of keywords in different topics that pop up here. So it can be about new technology in the domain that you need to be aware of. People talk about machine learning, NLP, a lot these days. It can be quant risk domain. It can also be for trading purpose, whether it's for models or for trading strategies. And you can see that's a job that deals a lot with data, a lot of libraries, a lot of development skill set. And of course, in most of these job advertisements, you can see that most of them require a certain level of experience. So with that attempt, I've tried to classify, to split the quant landscape into three main areas. And it's where I had experience before I joined Bloomberg as well. So first of all, it's about quant risk. It's where you measure the risk for the organization or for the client that you manage the portfolio for. And then you need to analyze the risk and come up with a plan, a strategy to mitigate the risk. That's what I did back in BNP. I work on the prime brokerage and clearing and execution services. And I work within market risk team, market and counterparty risk team. And it's where we act as the holder of our clients' portfolios. So we really need to understand the market risk that they have on their derivatives books, but also the counterparty risk that we have facing a particular client. And for that job, we need to do a lot of stress testing, VAR analysis to understand what is the threshold above some level threshold, the portfolio from the client side will become risky for us, and we will need to require extra collateral from the client side, for example. And that's a domain where it requires an understanding of the latest regulation as well, because it's very much impacted by new regulation. When I work on derivatives, we were impacted by FRTB on the trading book of the banks. When I work at Societe. Then for collateral on derivatives, there was the new requirement, which was called SIM requirement, SIMM, that you might heard about before. And then in insurance, there was everything around Solvency II. All of these new regulations push these financial institutions to implement models and daily monitoring of different type of risk, like market risk, credit risk, and counterparty risk. And I remember in my first experience, when I first started in finance, my first job was in an insurance company. And we look after the investment book of the insurance company. And I had a very naive question on why people invest in risk assets. And I remember very well the first lesson that I had with that job is the risk come with the opportunities and the revenue. The higher the risk, the bigger the opportunities. But the key question for a quant risk or a risk managers is whether you can measure the risk and whether you can monitor the risk. When it's under control, measurable, and when you can have a clear plan on how to mitigate the risk, you will then have a full information on whether you can take that risk or not. Then from that experience, I then moved to work more deeply on derivative pricing product. That's when I was Quant Product Manager for Open Gamma. That's the second areas of the quant landscape that I would like to talk about. For a solution provider like Open Gamma, where I worked before, we provide our clients solution to optimize their capital costs by doing arbitrage on the collateral models when they invest on derivative portfolios. And in sell side, you can have derivative pricing team who focus on developing and implement models to price very complex products. Back in Societe Generale, when I work on the exotic credit desk, my team was more market risk team, but we work very closely with quant derivative team who implement pricing product. And we also work very closely with model validation team as well. So every day, the trader will care about how many P&L they made over the last day. And as market risk desk, we inform the traders we try to explain the P&L using different bricks. But we also support the trader whenever there is any update in the pricing model. We will do the analysis of the P&L impact on their book. And I remember back that time when I was at Societe Generale, there was a change that we made in the model to calibrate the recovery rate and the correlation matrix on CDO product, on CDX and products. So that's when we need to understand how a CDX works, how the pricing model works, and what is the impact of that change on the correlation model. Then it might be, I spoke to another friend recently who is in model validation team, who shared me another story about the pricing model, which is quite interesting. So any change on the market, if you have any big jump on the market data that might impact, that might make the model obsolete, and the model might not be suitable for that kind of change on the market, you then need to discuss that with the trader and the model validation team to see whether we need to update the model and how we can make an adjustment to the model to update, to take into account the big change on the market, for example. Or it can be some simpler scenario where, let's say this year, 2024, in February, we have 29 days instead of 28 days. Sometimes in the system, we haven't take into account that scenario, and then on the 29th of February, the pricing model didn't work out. So we need to see where the bug comes from, and we need to update the pricing model. So that's some story around the quant pricing. Then coming to the latest experience where I am working on now, is about quant trading. So after Open Gamma, I joined Bloomberg to work on our quantitative and data science platform. That's what is called BQuant. And the role of my team is to provide quantitative solution to our clients who look at a lot of data on the market and try to extract signals to build systematic trading strategies, and then backtest these strategies. And then when they see there's alpha from these strategies and backtesting model, they're going to implement it in production. So that is slightly different to my previous experience. This is much more linked to systematic strategies. We work a lot with different hedge fund and asset managers. And it's a very exciting areas because I think it's a nice junction across quantitative mathematics models, but also finance and then data science, because we have seen that there are more and more firms who adopt machine learning in their quantitative strategies. Skill set that are required for the domain. I would like to say that it doesn't matter whether you work in quant risk, quant pricing, or quant trading. The type of skill set remain very similar. First of all, you need to master a programming language. I learned Python with CQF, and since then I use it every day. For banks or for hedge funds, a lot of firms are using C+ or Java. I code a bit of SQL and a lot of VBA back in banks. For example, there's a lot of people use R as well. Then you need a strong foundation in mathematics. It will make the work much easier when you understand the foundation. It can be the foundation for the derivatives pricing models, or it can also be foundation in maths that allow you to understand different machine learning techniques. And with a strong foundation, it allows you to understand the different white papers when there is any new release of the model or any new technique that is published on the market. You can self-study very easily with a strong background in maths. Financial knowledge, of course, that's very much needed if you want to do a translation from mathematical signals into the real world and try to interpret what you see from the model into the real world. For that, it will come with experience, the financial knowledge. After years of working, you will get to understand deeply how the market behave, what is the expectation in different scenarios and situations. Data analysis and machine learning, that's a new skill set that become critical now, given that, in every talk that I've joined recently, the word AI has been used a lot. Everyone talk about AI, everyone talk about large language model. And I think we cannot stay outside of that trend. We need to equip ourselves with the knowledge of different machine learning techniques, and more importantly, how we can apply these techniques in finance. And lastly, it's about analytical and communication skills. It's very important. The fact that we work on technical job like quant developers doesn't mean that we don't need to care about the communication. It is even more important because you compare to other job, because when you need to talk to a non-technical stakeholders, you need to know how to adapt the speech, how to translate the complex topics into something easy to understand for everyone. And it's very important, because without that, you cannot collaborate with different people from different backgrounds within a firm. You will see yourself working with engineers who have data science and software engineering background, but who might necessarily understand deeply about the finance. You will work with sales who understand their client very well, but who might not understand the quant areas. So yeah, communication skill, like for any other job, is very important and critical for this role. And lastly, what I am doing at Bloomberg, as I explained previously, my team is focused on building a quantitative solution for our clients. So it's slightly different from a quant developer role in a bank or in a hedge fund, where the scope is tied to the scope of the desk. You might see yourself working in silo on exotic credits, like what I did back in SocGen, or on option and futures, like what I did back in BNP, or you might focus on equity only or corporate bond only. But here in Bloomberg, my team is exposed to a very large scope. We work with all kinds of buy-side firms on the market. So we offer, because the platform is a cross-asset platform, so we can see ourselves working on a systematic strategy for an equity quant portfolio manager. And then a few days later, we need to read a white paper on fixed income to help another client building their strategy on fixed income. It is very broad in terms of the scope of the team. And our projects focus very much in systematic trading signals and extracting the insight from a range of data that we got on the platform. And portfolio optimization and backtesting as well is another area of focus. And over the last 2 years, on top of the traditional systematic approach like factor screening or fixed income relative value screening, we have been working a lot on new technology, like how to apply NLP on news data set to get trading signal, or how to look at the minute per minute bar to come up with systematic signal for intraday trading strategies, etc. How a typical day looks like? It's a very good combination between client meeting and internal meetings, and also coding work. On the client engagement side, we have a lot of client meeting to discuss the use case in depth with the client. Is to understand what problem our client are facing when it comes to implementing and automating quantitative strategies, and how we can help them to solve this problem with our product. Of course, we do a lot of product demos as well. That's where we showcase the solution and the value that we can bring to our clients. Then we spend a lot of time in prototyping and developing solution for our clients. We work very closely with our client. We do training workshop. We do the spec of what our client want to implement on the platform, and we help them on the daily basis to implement these models. Lastly, it's about internal collaboration. We have a lot of meetings with internal stakeholders, whether it's technical stakeholders or non-technical stakeholders, to understand, first of all, to make sure that we are all aligned on the progress of the project that we are working on. But also we have a lot of discussion with our sales team and our product manager team to define the strategy for the product, how we position the product to our clients. That's the end of my presentation. I can see we have some question here. Chris?
Chloe, first, thank you very much for taking us through your slides and talking about your day. And yeah, we do have a lot of great questions. So you ready to take some of them on, Chloe?
Sure, of course. Tell me.
There are lots of great questions here. I'm going to start with Kellen's question. What is an example of a small quant project, and what is the small project turnaround time? I like this question because it sort of gets into the nuts and bolts of it. What is a medium large quant project, and what is the kind of turnaround time? Also in these projects, what are the various stages from ideation to launch? So he's asking, Kellen has a question about your workflow, which I thought would be interesting for you to.
Very good question. Yes. So I think a small quant project can be, let's take an example on equity, given that everyone familiar with stocks. A small project can be you define some factors that you want to explore. The most famous factor on the market are style factors. So it can be value factors, where you look at the stock that are undervalued. You can look at the stock that have greatest momentum, greatest price increase over the last 3 months, for example. That can be called momentum factor. So let's say you have these two factors. You will calculate this factor on a huge universe of stocks. It can be own active stock across a certain exchange. It can be 1,000 tickers, and then you will then rank the universe with this factor value and decide how you want to come up with a trading idea. You might want to trade the most cheapest stock, having the biggest momentum over the last 3 months, for example. So that's for the screening exercise is when you calculate this factor value over a huge universe and come up with a ranking or a scoring model, and then narrow down from 1,000 stocks into a list of 50 stocks that you might be interested in to invest. That can be a small exercise. Then if we want to level it up, we can then come up with a trading strategy. You can buy the top cheapest stock and sell the most expensive stock. It can be a simple strategy like that. And then you want to backtest that strategy over the last 20 years to check the performance of the idea. Then once you are confident with the trading idea. Then you will implement it in production. That's where you need the connection from the research platform to the execution platform. In terms of the timeline, a simple project can take only a day to 3 days, but to implement a new trading idea from idea conception to the execution of the idea, it can take 6 months.
Excellent, Chloe. Thank you. There's Ankit has a related question. He asks, is a quant developer an individual contributor role? The answer to that is primarily no, but maybe you can talk about some of the folks that you have to interact with when you're vetting a project and you're going through those factors that you were talking about, like who are the stakeholders, who are the clients, like what are your interactions like?
So as a team now, we are interacting directly with our client. So we are providing solution for our client. So we, the people we interact most with are quantitative portfolio managers or quant analysts or quant developers. So they, first of all, is the data collection and data explorationary step. You need to define what kind of data you need, and the value of the platform that we are working on is we provide our clients with all of the data in one single place, and all of the data are clean. But for a lot of other case, we can see that people spend a lot of time. 6% of their research time are spent on manipulating the data set, cleaning the data set, and handling all of the mapping.
Chloe, I'm sorry to interrupt. Did you say 6 or 60?
60, yeah, on cleaning the data set and doing all of the mapping and doing all of the massage they need to get a clean data set that is ready to build model on top. So first, it's about the data. Then it's about exploring different strategies. That's when there is a lot of consulting work around it. We work a lot with our research team, and our client read a lot of white paper on their side as well. So there might be a white paper that they want to implement. Sometimes it's a mix of different ideas as well. That's where we build different strategy on the platform, and we backtest the strategy. Okay,
now on to more general sort of getting the job questions. We have lots great range of questions, from the technical to the sort of how did you get the job. Of course, anonymous attendee asks, what are your suggestions for preparing a quant dev interview?
That's a difficult question, because as I mentioned, the quant area is very broad. So you definitely need to understand what are you applying for. Is that a quant risk role, or is that a derivative pricing role, or is that a quant trading role? Normally it should be mentioned in the job description, but ideally I would talk to someone I know from who work at that firm to understand some business background as well, and to understand what the firm are looking for. I know it's not easy all the time, but I would try that exercise first, and then from the technical perspective, I think you need to stick to the, if you are lucky and have a nice description of the job, you can stick to the technical requirement that they put in there. But again, the interview can go very depth in terms of how do you do the pricing for that derivative product, or tell me about different systematic strategy that you have implemented on the side. Tell me about a scenario where you need to come up with a risk mitigation plan. Because I remember back when I was at BNP, we had 2 big events that year, where we had the election in the US and Trump won, and then we had Brexit at the same year. And as a quant risk, you need to prepare for these scenarios. You need to do a stress test for this scenario, for example. So It can go very technical, prepare the technical knowledge. But another side of the interview is how to understand the soft skill, which is very important as well. As I mentioned, being a quant developer doesn't mean that you don't need to communicate well. It's the other way around. You need to be able to extend complex concept into simpler word so that everyone can understand. Because if it's only you who understand the issue and the solution, you will become a blocker in the firm if you cannot communicate it. So you will need to prove that from the soft skill side of things, you can communicate efficiently and you can collaborate efficiently with different type of stakeholder.
Chloe, thank you for that. And those of you who have been on a few careers talks have heard about that before too. The importance of communication and the soft skills, so to speak. So you need to know the math. Obviously, you need to know the programming, but how you communicate and even persuade others. Something we've heard at a number of our careers talks. So, Chloe, we have a lot of questions. We're going to try and get through as many of them as possible. We'll combine the questions as we see fit. There are a lot of questions about masters versus the CQF. We'll address that at the end. Victor has a question that you might not be able to answer definitively, but you might have some thoughts on it. Looking at the 3 areas of quant finance: risk, derivatives, and trading. Okay, is there an area in higher demand? As a follow-up question for someone thinking of becoming a quant developer, is there a preferred place to start?
Very interesting question. I think there's a high demand at the moment on the trading area, given the emerge of all of the new machine learning and AI techniques. People, hedge fund asset managers, and even sell side banks, they want to explore how they can apply these latest technologies into finance, how they can benefit from it. And I don't think any firm can afford stay outside of that trend. So I would say it's a very exciting area today, and I can see a high demand for that at the moment. Quant risk and quant derivative. Quant risk, I think we always need people with quant risk background because managing risk is always critical. And also there are always a lot of regulation around that are updated and that are evolving in the industry. So it's very important for all firms. Quant derivatives pricing is difficult because it's the math for the derivative pricing more advanced compared to I think it's the most advanced area in terms of the math models. So if you love math, I think it's an area where you can explore as well.
Thank you for that. Claire would like a little more clarification on what you do every day. She's asking, are you primarily responsible for executing strategy development, writing signal, or engaging in internal communication?
We are in charge of helping our client to find signals, exploring signals from the data.
Excellent. Okay. For and Anonymous asks, for quant trading, which programming language do quant traders use the most? Basically, the question asked.
It depends on the firms and the type of firms. I can see that for banks, it's a lot of Java. For hedge fund and asset managers, for hedge funds, it's more C++, and Python is becoming more popular as well these days.
All right, so Lily asks, during the project data cleaning is time consuming and the client might not be very patient about it at the start of a project. How do you convince clients to be more patient during this stage? Sounds like Lily is speaking from experience here. Like we feel your pain, Lily. So what advice do you have for Lily?
So maybe I was not clear. So in general, we can observe that our clients spend 60% of their time in cleaning the data set, but that's where we add value. The data that we provide our client on the platform is clean data set already. it does all of the heavy lifting for our client. They don't need to spend that much time on cleaning the data. And from our perspective, we don't need to do the cleaning neither, because we already have clean data set on the platform that we work on. So we spend most of our time on reading white paper, understanding what our client want to implement, and proving to our client how efficiently they can use the platform to implement these strategies. And hopefully it can help our client to find alpha signal. Of course, they won't share exactly their secret sauce. Otherwise, we won't open our own hedge fund. But the idea is more to guide our client and do prototype for our client to implement their strategy.
Excellent. And Abdul asks, in your experience, do clients typically have their own quant teams that backtest the models independently? Also, in your view, are clients seeking to move from using external consulting style teams to building their own in-house teams? What is the level of proprietary advantage that quant solution providers have over sell-side firms?
It's a very good question. It's true that there are a lot of firms who have their internal quant team, that's for sure. But it depends on who we are talking about. Are we talking about a huge organization like Main Group, or like Brave Howard, one of these famous firms who are very advanced in quantitative? Yes, they do have their internal quant team. But there are still a lot of medium to small size firms who don't have the whole army to implement to implement this approach. It will take them in average 18 months to set up a quant team with IT resource and quant resource to be able to start exploring signals. On why with our system, it takes them only in average between 3 to 6 weeks to test different ideas. So it's about the time to market. And as a quant solution, like our team, I think that the most exciting part of the job is to be always challenged on the latest technology. You need to keep up with the technology. You need to always educate yourself about the latest trend on the market and work with our clients who are very curious and who want to implement the latest technologies. I remember 2 years ago, our team was very new to large language model. Then we hire people who have expertise on that domain. We do training. We do prototyping with our clients. So it's a learning curve as well. And given that the industry evolved very quickly, every firm need to think about how they implement this quantitative approach in the most efficient way. Because if it takes you 18 months, the world have already evolved to another level, and you stay behind the curve. So it's the challenge on how to be up on the curve, and it's about the time to market.
We have a number of questions about your work-life balance and the work-life balance of someone in a quant developer role. At least one person asked what specific hours you work. So
Right. Okay.
I think the time commitment and how flexible you need to be in all of that.
Yeah, so I think we are lucky compared to the rest of the industry, because we have very flexible and work-life balance hours in the team. But I know that working in a hedge fund might be much more challenging. You need to start early, and you still wake up when there's some news in the evening on the market after the market close. So and I do have some from my team who came from hedge fund side who share that feeling. So yeah, within my team and within Bloomberg, we have very flexible hours for everyone to help everyone to have a very nice work-life balance. Personally, I am a working mom, so I just came back 7 months ago from a maternity leave, so I can guarantee to you that I still survive and I still keep up with the speed here. So we have a very nice working hours and work-life balance condition here.
Outstanding. Okay, and lastly, we have a number of questions about how the CQF itself benefited you. When someone asked about, various types of masters in computer science versus master in financial engineering. If you could talk about how the CQF benefited you, if you have any other thoughts about traditional master's programs, that would be great to hear.
So CQF was something opened a lot of new doors for me, I would say. So I did it 5 years ago. It's quite a while now, but it's when I first learned Python. I could other language before, but that's when I first learned about Python. And it's such an easy language and user-friendly language that we can self-study a lot. So it helped a lot. And the fact that we learn about machine learning, even though we learn about the machine learning techniques within the program, was very useful. And that's how I found a job. How that allowed me to move from quant risk to quant trading today. And then from that, of course, I had to keep the learning up by constantly doing learning and training on latest technique, as I mentioned. But it was a huge enabler for me, CQF.
Also, someone asked when an MFE would be appropriate versus a master's in computer science.
I would say it's different. The reason why I select why I selected CQF rather than a master, because I wanted to work at the same time, and I don't want to spend time on. So a master can give you profound understanding, but you have a lot of different objects as well. And what I was looking for is something really focused on what I want to do. And the way CQF was designed is very spot on, very direct on different quant areas that quants need to know. And you don't spend time to on subsides on less important subjects, I would say. And it's very intensive, but it's also very spot on into the content, and it allows you to work at the same time. And the way that CQS is organized is very flexible. You can do it in person, you can do it online, and so that's the reason why I selected CQF.
Just one note: we actually can't do it in person anymore, Chloe.
Oh,
Right?
not
It's all
possible
remote now.
anymore.
Yeah, it's all
Right.
remote now. Even
Okay.
in the UK, there's one since the pandemic. It's been all remote.
Oh, I
But
see.
and the reasons you gave are why so many people do the CQF program: the flexibility, the focus on practical quant finance and machine learning. Yeah, so thank you so much for that. Chloe, there are so many more questions. By the way, for those of you who are, and there are questions about the CQF versus MFE. I'm happy to answer any of those questions for you as well. Do urge that you come for those of you who want to learn more, come to our information session on Monday. Good use of your time, about 45 minutes. Sessions conducted by Dr. Randeep Garg, who's the head of the CQF program. He'll take any of your questions afterwards toward the end. But Chloe, thank you so much for making time for us today and providing insights. There are so many more questions. I'm sorry, folks, that we can't get to all of them. Is there a way people can stay in touch with you, Chloe?
Yeah, of course. Please feel free to reach out to me via LinkedIn. If you have any question, I'm happy to answer.
Excellent. Well, Chloe, thank you so much on behalf of everyone globally who joined us today, and thank you folks so much for taking time out of your day.
Yeah, everyone. Have a nice day. Thank you. Bye-bye.